Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, January 10th, 2011. Well, again, folks, you're seeing a midday float higher. The markets are slightly lower on the day, but notice the pattern that keeps repeating. And this is such an important factor of today's video and something I've talked about to my Research Center subscribers day in, day out, is the propping by the Federal Reserve is non-stop. You see early in the day on Friday, we saw a nice sell-off, but look at how the markets recovered. Today, we saw a nice little sell-off. Look at how the markets are recovering. It's the same angle, too. See the angle here? All right, again, take that angle and just map it across every single day. Anytime you see markets selling early in the day, by the end of the day, it seems that the markets have floated all the way back to the neutral or positive side. We'll see if they go back to the neutral positive side. Friday, we did end ever so slightly lower. Today, it looks like we are right now ever so slightly lower. You have the Dow down 45 points, NASDAQ and S&P just down 3 points on the day. Basically a 1/4% drop today. Nothing to write home about whatsoever. But again, it's the angle of the market. Anytime you have this selling, the angle of recovery seems to be normal. In fact, it seems like the Federal Reserve has their hand on the trigger and is willing to continue to prop the markets up day in, day out. If I go back even further, folks, you can see this same type of activity. All right, for instance, here's another day. Sharp selling early, right around midday, props it up. Here you have a gap down, and then the market gets propped up. Here you have an early to mid-morning sell, and the market floats back higher by the end of the time. You can go back really quite a ways. Here's another day. Early selling, props back up. Here's another day. Selling, props it back up by the close. So it's just going back and back. I mean, here's another day, gap down, and brings the market up. The markets are just not seeing that heavy selling that's needed to push away the Federal Reserve from what they're doing, which is, again, creating an artificial asset bubble to make the average American fool themselves or fooled into thinking that the economy is truly recovering, getting them to spend more, run up more credit card debt, really creating that next bubble, which at some point in the future, not in the foreseeable short-term future, but in the next 5 years or so, towards that 5-year mark, will probably end up collapsing again. So again, that's the Federal Reserve's play. I mean, we know it by now. Everyone's talking about it. I talked about it before everyone else. We've continued to talk about it and tell you about it. But understand exactly what's going on. I think it's important for us as Americans, as citizens here, to understand what our government, what are certain bodies in the government, and granted, the Federal Reserve isn't part of the government, but it's still considered the same type of entity. I mean, really, they're working together to do this. All right, and again, how does it have an effect on the general public? Well, the unfortunate side of it is, I mean, you're doing it to cause or create jobs, but what it's actually doing is the poorest Americans are going to be hurt the most as food prices and fuel and energy prices go up because of inflationary measures. Like we've seen oil just continue to go up. We've seen gold and all the other commodities, copper and so forth, continue to rally. That's occurring, and that's going to make it harder for the average American, those that can't necessarily afford things, be even more expensive for them. So it does have some negatives. Those of us that are traders, those of us, it's not as big a deal, but it's still an unfortunate social aspect of what the Fed is doing. And trust me, eventually you will all look back and say, I wish the Fed hadn't done that, because when everything collapses and you have a bubble that bursts that's going to be even bigger than the real estate bubble, there's a lot of average Americans that are even wealthy that will get hurt very, very much so. So, I mean, there's a lot of problems out there. Unfortunately, I think the Fed is creating more problems, even though in the short term, and I'll say this right now, in the short term, it's absolutely working. It's the long-term consequences that are going to be detrimental to everyone in the U.S. All right, let's go back, talk some markets here. You have to be appreciative of the trend lines today. The trend lines continue to work so perfectly. We have a gap down this morning, and you push up right to the blue line, pull back. Then you push up through the blue line, hit the 20, and pull back and close on the blue line. Then selling comes in, takes us to a double bottom. That was a long play. And then you've moved back up to the 20, pull back, break through the 20, consolidate here, and really start to just float sideways to up. Really, for the rest of the day, that's somewhat expected. I could see a little bit of selling, but I don't think you're going to go back to the lows of the day at this point. The Federal Reserve will not allow that to happen. It doesn't sound weird to say that. The Federal Reserve will not allow the market to be a market. I mean, here we talk about the stock market. A market is buyers and sellers meeting to create a market of true value. That doesn't happen anymore, folks. It's all about the market getting propped up artificially to create the false wealth effect that, again, will, in thought processes by the Fed, create that recovery. And again, it's interesting because we have seen economic data start to be better, but hiring has not really followed. Only 103,000 gained in jobs in December is by no means anything close enough to something that would be significant for the overall recovery of this economy and the global picture. All right, a couple stocks to go at here. Let's first of all take a look at the UUP. I want to hover on the UUP quickly. UUP is slightly weaker today. That's also helped the markets come up. Notice here the dollar tops out early in the day. Right around 10 o'clock, 10:30, the dollar tops out and slowly fades. Have you guys noticed what happened to the market? Ever since the dollar faded, that's when the markets moved higher. If I go back to the spiders, the lows were made right around 10 o'clock, 10:30 right here. And ever since the dollar started to slowly come in, look at the markets. It's gone just sideways to up. And you can see we're starting to inch up here. You're going to have major resistance on the intraday SPY at around the 200 moving average. But again, you can see the inverse relationship. As long as the dollar slowly floats lower, the markets really probably will not end up falling much. In fact, they'll probably be slowly floating up. And we're seeing that today, no doubt about it. All right, the GLD today, folks, is up 43 cents after getting hammered last week. If I go to the daily chart, you can see a big drop last week. We're still consolidating in a slightly bearish pattern on the GLD intraday, the daily chart here. That could end up playing out possibly as early as late this week to next week on the downside, as long as you do not regain the 50 and the 20 moving average. If you get back above those, it negates it 100% and you start to look for upside. But right now, you do have a bear flag there. The USO today, folks, and again, there was a pipeline issue in Alaska over the weekend. That's helping oil prices move higher as well, up 42, 43 cents on the SPY. And again, you're stuck between the 50 and the 20 right now. We'll see which way we end up going. It wouldn't surprise me to see the oil prices go up a little bit more in the short term, but we'll watch and see how that plays out. Stocks to watch today: Apple Computer up strong today, up $5.63. Now, the key to Apple right now is the fact that you have to understand Verizon is going to be making an announcement tomorrow. Expectations are that it's going to be that they're going to start to debut the iPhone at Verizon stores on their network. That's something that AT&T has had exclusivity over for quite some time. But again, that's expected to change now. The question will be, is it just a standard iPhone? Is it just a standard agreement? Or is there going to be other things? Now, a lot of analysts are talking about how this is going to propel Apple's earnings, maybe a $475 stock one day. Who knows how that's going to shape up? But the one thing I will say, folks, is that the hype usually leads the stock up, and then once you get the announcement, oftentimes you'll see selling. So I wouldn't be surprised if today's good push results in selling tomorrow. Again, if it's just a standard announcement tomorrow on Apple. So it'll be interesting to watch and see how that plays out. Something I will be watching very closely. Chevron is lower today. Exxon is also lower. Both these stocks looking for some downside via the research center. And again, if you want the expert analysis, if you want the top swing trades out there, if you want to know what chief market strategists are doing, that's where you have to join the research center to get all that information. Nightly 30, 40-minute videos every night. Key plays on the hot charts and alerts. Pro Trader watch list plays. I mean, it's all there for you for $49.99 per month. That's a one-time fee per month. And again, you get everything listed under the research center. Chat room if you want some intraday analysis, intraday calls, good swing trades from the intraday stock chat as well. Then you got to be on top of things. Something I've highlighted to you guys, even in the free video over the last couple sessions, has been SOLF and the solar companies. That's just another kind of example of the amazing calls that we do in the research center, folks. I gave this out to my research center guys among many other trades. And again, SOLF, I love the chart pattern. I love the close on Friday. We talked about it on Thursday as being the play to buy. And again, if you bought it on Thursday, you got in around $8.30. Friday, it closed at $8.48. And today, it hit at the high of $8.89. So it's a great play. Target was the 50 moving average. The other play I gave you guys was JASO. Same thing. Look at that consolidation. Look at the breakup. So another winner there. And it's funny how we can pick the winners even in a down market. If you want to up stock, a stock that's going to make money going up, we're going to find it for you even in a down market because the charts will not lie, and that's the beauty of what we do here at In the Money Stocks. The chart patterns will be more powerful overall. You have to sometimes tone down your expectations because of a weak market. But as we can see, today the markets are lower, and the two stocks that I liked on the long side are both positive. Stocks that I liked on the short side are negative. It's a great thing like that. And again, it's all based on the proprietary techniques we've developed to help you learn. And we give you the trades. We'll help you learn how to do them for yourself, whatever it takes via the research center. All right. So that's some good stuff there. Goldman Sachs is trading down $1.15. Goldman has come off the highs. JP Morgan also down a little bit after a massive run up. That's been a nice little mover, except for the last couple days where that's fallen apart. Looking through my watch list, Google, Baidu, Amazon is they're all down a little bit, but not much. Research in Motion's up about 20 cents. Intel's up a penny. Alcoa earnings today, folks. After the bell, kickstarting earnings season. Really, this is for this week the main earnings. Then next week we'll start to get some more earnings out in the market. But Alcoa's had such a monstrous run. Going to be interesting if the price appreciation here can justify earnings. Neither a short nor a long to me at this point, especially ahead of earnings. It's way too risky in my book. All right, guys, I think that's about it for today. Go join the Research Center. Go join the Intraday Stock Chat. Let's make some money. Make 2010 as good a year as we had in 2009, if not better, by joining. Take care.